Good day, everyone. Thanks for joining us here in the chat. You tuned into the Crypto Flight Edition. Fellow Composite speaking. This is going to be a macroscopic look of the Chainlink and USD pairing. I think I found the line in the sand that this market needs to stay above to prevent any more downwards pressure. So we're going to go over that in this video. We're going to pull out our Fibonacci retracement. This will be kind of a short video. We'll also explore some ascending lines just to see if the market has lost or if it's still holding above financial support line, an ascending financial support line. So welcome back, loyal family. And if you're new here, we only go over price action, you know, the lines and stuff. So stick around to the end and let's not waste time and dive right into the charts here, shall we? All right, so today's June the 13th, 2021, and the current price of Chainlink and USD pairing, LINK USD is going to be $23.50, slightly positive, approximately 8.4% for the day. Okay. All right, ladies and gentlemen, here we are once again. ASMR, interesting analysis. So here's what I found. Okay, so it's really simple actually. This is my Fibonacci retracement tool. It has the 0.382. We also have the 618, the white line here. Looks like it's finding beautiful support there. These are the weekly candles, by the way. You also have the 786, that blue line right here, right there. All right. So what I want to show you all is how important it is for the market to stay above the 618, because if you notice, the weekly candles. So I guess let's do this before we go over the 618, because I think it's pretty obvious that the market is kind of trying to find, the financial support is trying to step in here at the white line, right? Hopefully you guys can see that 618 white line here. Okay. But the one thing that I'm starting to raise an eyebrow and say that like it's super critical because of the time. You guys know I look at the time, right? So what I did is I just kind of took this area over here, just kind of outlined it like that, right? And I say, okay, the buyers, it took the buyers approximately, let's just start from this candle here. The buyers, it took them 105 days, right, to simply walk up the stairs with respect to this previous high here at about $20. Okay. So it's just, I'm actually starting from this candle here with the lower shadow where the market just kind of, you know, gracefully walked up the stairs, kind of aggressive, right? Walked up the stairs and it got as high as the $52 level. Now, it took 109 days, but it only took 2 weeks to give it all back, right? So that's that makes me raise an eyebrow. That makes me say, hang on, let me just kind of outline everything for you here. So right about there, okay. All right, never like okay, nothing's ever rehearsed, guys. Pardon me there. So notice how the selling interest, it only took, let's see, starting with the red candle at the top, it's okay, so 28 days. So you're talking about 109 days and compared to just 28 days to move the market down. Substantial retracement, actually. Let's see how much of a retracement it was. As low as 70, like almost 70%. Yeah, like 71% retracement. Wow, ouch. All right, so that makes me concerned because if the market cannot sustain itself above this level at about $20, then we'd probably have to just revert back to the previous or the next level down on the Fibonacci retracement tool, which will be down here. Take it easy there, bulls. I'm not saying it's going to happen, but just be prepared. $11.80. Okay, right down there. So if you get like a weekly candle to close below the 618 at about $20.68, just wait for the fake outs. Okay, if it closes below and it just kind of pops back above it, that's simply a fake out. But if it closes below and it stays below, then yeah, it's probably going to go down to the $11.70 down here. All right, and somebody say, well, Napoleon, I've done that before. How do I know when it's officially breaking down below a level or if it's a fake out? Well, what you'd have to do is you may have to go down to the lower time frames, but the 1 day, I wouldn't recommend going any lower than the 1 day, because you see how the daily candles, and this would also take time. Like, I'm not saying this is going to happen overnight, guys. I've been doing this since 2018, not a long time, but long enough to have a unique way of looking at candlesticks, right? So you have to pull up like the daily candles, or, you know, maybe even the 12-hour candles and study them on the alternative markets, not traditional markets. Okay. That's what I would do. And if you notice here, you see how like these two candles, right? And always look at the time. You see how the two red candles, 1, 2. But so far there's 1, 2 red candles that only got as high as this red candle right here. You see that? So that's kind of a sign that, okay, so the buyers, you gotta keep pushing, man. You can't really show any weakness here, because the sellers realize that if they can seize an opportunity here, they're just going to drop the price down below $20 and just keep walking down the stairs, as the market found its highest level here at about $53. If you're new, guys, we only go over like stories, okay, behind like candlesticks and stuff. So hopefully you can appreciate, or at least kind of tune in and have an open mind while we're going over this stuff here. Excuse me there. All right, so that's the difference between understanding a fake out or a breakthrough, okay? So when I see a market finding support at a horizontal line, I only do one thing, guys. I find a descending line, like what line is keeping the price down. So I'll do something like that and then say, okay, that's my resistance level right about there. So that's kind of noteworthy, right? If the market is finding support at a horizontal line, all you have to do is find out what is keeping the price down. You just pull out your descending line, and you should be able to kind of use that as a reference if it's keeping the market down, okay? I mean, can it break through? Yes, absolutely. It can break through, but at least this gives you like a starting point, right? Because if it's getting rejected, bouncing off, getting rejected, right? And you just see it kind of going down perfectly, then at that point, the market would need to make a move, right? Fake out, right? Break out, something, right? I'm just kind of giving you a little bit of information in terms of finding out where the resistance line is. It's typically a descending line if the market is bouncing off a horizontal level. All right, let's continue here. So that's what I'm seeing. $20, crucial. That is the level. All right, let's see if we can find some ascending lines. Pull up the higher time frames. Remember to always put the ascending line at the candle's bodies, okay? Always the candle's bodies. All right, let's see here. Find an extended line. So we'll do something like this to say, okay, seems like the market is staying above that ascending line of financial support right there. So it looks, I don't want to stretch the truth here, guys. Let me see if I could just find the candle's bodies here. Something like that, or something like that. All right, so something like that. Make sure the candle's body is perfect. All right, not perfect, but something like that. All right. So far, it looks like the market is above the financial support line. Some may say, wait a minute, why don't you make the ascending line a little bit more steep? So if I did something like this, then that means the market has already broken down below the financial support line. Okay, that's fine. Then it would just simply seek an alternative level of financial support, which would be the line that we put on the chart originally right here. Right, so that's what I'm saying. $20. Let's give the market a few weeks. Okay, you have to give the market a few weeks, making sure that it's actually walking up the ascending line of financial support. Looks like it extends over about all the way to September the 24th. If it can continue to maintain support above this line here and find financial support, walk up the stairs there, that'd be beautiful. Okay, so it's at a critical level essentially. All right, we'll give you guys an update every so often, hopefully every week or something, right? Every week or so. And that's going to end the video. The video is insinuating that one level, $20, that psychological level, it must stay above that level. And again, let's give it a few weeks. Okay, that's it for the video, guys. Thanks for sticking around to the end. Leave an appropriate thumb below the video if you enjoyed the content, so that the YouTube algorithm can push this Chainlink video out to the investors. Let them know the market is above the financial support line, ascending financial support line, and it's also at that 6.618 level on the fib. Also, if you're new, before you go, we covered the traditional stocks. We'd love for you to join us here on this interesting journey, 7 days a week. All right, it gets very interesting, just to let you know. Subscribe, hit the bell, and we'll send you that information when it is available. All right, once again, thanks for listening until the end, guys. Huge support. I appreciate your time. Execute your strategies. We'll talk soon, and bye for now.